Welcome to Biz Wire. We lead off today with finance ministers and central bank officials of the Group of 20 who have been seeking to strengthen financial supervision and avoid currency devaluations at their meeting in Moscow. Chinese Vice Finance Minister Zhu Guangyao said financial supervision remains a major issue in the G20 process. Zhu cited the fact that the United States has vowed to implement the global banking regulatory standard Basel III in the coming months, while the European Union has submitted the bill for parliamentary approval. Zhu said that though the implementation has been prolonged, the United States and Europe have already recognized the significance of fulfilling their commitments. The Basel III rules on bank capital adequacy were worked out by the Basel Committee on Banking Supervision and the Financial Stability Board in response to the global financial crisis. They strengthened bank capital requirements and introduced new regulations on bank liquidity and capital adequacy ratios. Zhu said that G20 finance ministers and central bankers demanded decisive movements from the U.S. and European sides and welcomed the latest promising signal. Zhu added that efficient implementation of the Basel rules will enhance the group's credibility. Meanwhile, Zhu said that the effect of the ultra-loose monetary policies adopted by some developed economies has aroused concerns from developing countries. During the Moscow meeting, developed countries have also pledged to consider the spillover effect of their macroeconomic policies, especially the monetary policies on the world economy in general and developing countries in particular. Reforming the international currency system is another main topic of the meeting. Participants have been discussing measures to implement the 2010 Seoul Summit Agreement on reforming international financial institutions and IMF quotas. Well, Britain's finance minister George Osborne said the world should not make the mistake that it has made in the past of using currencies as the tools of economic warfare. Emerging market officials reiterated a call for developed countries to assess the effects of easy money on their economies. They're concerned that a flood of easy money will push up currencies and create asset bubbles. In a nod to the complaints, the G20 said monetary policy should be directed towards domestic price stability and supporting recovery. Officials say they will monitor and try to minimize what they call negative spillovers abroad without going into specifics. G20 finance ministers moved to calm fears of looming economic warfare on the currency markets, pledging they would not target specific forex rates or devalue currencies to make them more competitive. Concerns similar to previous disputes with China have been rekindled by Japan's plan for monetary easing to boost inflation and economic activity by reducing the value of the yen under Prime Minister Shinzo Abe. The communique issued by the group did not single out Japan for its aggressive monetary and fiscal policies that have seen the yen drop by 20%, a trend that may continue. European capitals fear that devaluations of currencies like the yen would make their own exports less competitive and harm extremely fragile economic recoveries at home. An American official said G20 discussions were focused more on currency frameworks than on a particular country's policies. And for the first time in several international meetings, the concerns over currencies have overshadowed the economic troubles of the debt-ridden Eurozone, which leaders hope is heading for a gentle recovery.